Ladies and gentlemen, Assalamu alaikum. This is the second day of this very interesting international conference. This is a very interesting session. I should thank the organizers for putting me as a chair of this session, because I'm going to chair two very interesting and very important speakers. The title of this session is Alternative Views on Global Financial Crisis and Future Reforms. I have two, again, very interesting speakers. The first one is Bill Still, and the second one is Tariq El-Diwani. Tariq I will introduce once his turn in terms of presentation will come. So I will introduce and have Bill Still as the first speaker. Bill is a very well-known and interesting personality. If I call him a celebrity, I think he will get annoyed. But I think nevertheless he is somewhat of a celebrity after he has produced a film some time ago. But he has continued to produce films and produce books as well. He has worked as newspaper editor and publisher. And then he has written more than 20 books. And today I think he will give a summary of his opinion after his wisdom of more than 50 years, I guess, right? Yeah, okay, so Bill, it's your platform now.
Okay, I'm deeply honored to have been invited here today. Thank you to the organizers for all their hard work, and especially Nadia Din, who invited me here. And thank you to all of you for attending. This conference comes at a most important time, as national central banks have been strongly encouraged by the BIS, Bank for International Settlements, to begin shrinking national money supplies. This just came out on June 23rd in a speech by BIS General Manager Jamie Karuna at the bank's annual meeting in Basel, Switzerland. Easy financial conditions can only do so much. More stimulus cannot revive productivity growth. Adding more debt will not strengthen the financial sector, nor will it reallocate resources needed to return economies to real growth. So forget about all the speculation in the press whether QE will continue or not, because it will not continue. The central bank of central banks has spoken. The advanced economies, the red line at the top of the chart, are now running sovereign debt to GDP ratios approaching 120% and growing at about 5% per year. Now, these are 2012 numbers. Certainly, this is wildly unsustainable in itself. In fact, anything over 80% is a drag on economies. 90% is officially dubbed by the IMF as unsustainable. So what's going to happen? No one can know for sure, but remember, these numbers come after completely unprecedented money creation worldwide. All this money creation and yet near stagnant GDP growth. Imagine what's going to happen once the monetary heroin is withdrawn, which is about to come. I'm going to give you a little different look at the sustainability of economic systems. I call it macroeconomics. We're going to look at four basic things that you may not have considered in the past, but even when taken individually are very powerful. The first one is humankind's 2,500-year march towards freedom. What started it, what tends to work, and why it works. The second one is the negative effects of over-consolidation of power on national economic and political structures. The third one is a national debt. Is it effective? Is it necessary? And finally, number four, the money creation power of a sovereign and why it is important. What is the most important political development of the past 25 years of human history? It is certainly the development of self-governance, governance of the people, by the people, and for the people. governance in the public interest instead of governance in the interest of a single person, family, or relatively small privileged group. In other words,
freedom, 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 freedom.
that was American folk singer Richie Havens in 1969. People long for freedom so much that they sing about it. The Irish have a song they sing in pubs lamenting that nation's lack of freedom. Ireland didn't win its independence from Great Britain and have its first constitution until 1922, and only after 800 years of warfare. Here we see a Saturday night in Tehran, a Tehran apartment block with youthful residents calling out for freedom back and forth between the buildings.
Magna dictator! Allahu Akbar! Magna dictator!
So today, 2/3 of the Iranian population is under 25. The vast majority of these young people want freedom and a Western lifestyle. In June, Iranians flooded the polls and elected the most reformist candidate, Hassan Rouhani, by an overwhelming margin. We don't yet know if Rouhani is just a fake reformist or the real deal, but the Iranian people have spoken decisively for freedom, and they should be encouraged by the West by lifting some of the crippling economic sanctions that have devastated the middle class. Nations who love freedom need to encourage these Iranians. So what is this freedom that people will die for to achieve for themselves and their families? It's characterized by effective self-governance. Government should be the servant of the people, not the dictator manipulating the public. The people should not fear their government. Instead, they should believe that they can have some influence over the decision-making process. Another of the many attributes of freedom is the rule of law. Government cannot be respected by the citizens unless they perceive the rule of law as something that protects them rather than suppresses them. And remember, it's either the rule of law or the law of the jungle. And I don't believe that anyone in this room would voluntarily vote for their families to return to the law of the jungle. The third attribute of sustainable self-governance is buy-in. Buy-in is critical to the political and economic sustainability of a nation. For example, my parents would never have simply walked by a piece of trash in the street when I was a kid. They would have felt that it was their public duty to pick it up. My parents knew that government can't run efficiently without everyone helping out. That's the whole purpose, the whole concept behind government. It's what it's supposed to be about anyway. We all pitch in a little bit to make the system work. They understand these basic responsibilities behind freedom. Freedom is never just given to you in perpetuity. It isn't free. You have to work at it every day or we will surely lose it. And we have to teach these lessons to our children and our grandchildren. That's something that's typically overlooked. My children are less likely to understand civic duty. They're all good kids, but they have grown up in the world of television. And the message from television is government is bad, government is corrupt, better leave it to us experts. This is not a message which will encourage participatory democracy and buy-in. It's the recipe for looming disaster. So for a government to be sustainable, it must operate fairly or the public will slowly turn against it. You lose buy-in. Without buy-in, you literally have nothing, no ability to have your government prosper and be sustainable. These shifts in public opinion are subtle, but once they become apparent, they're already so advanced that they are difficult to turn around. It's impossible to put a date on the emergence of effective self-governance, but let's just say it started here, in ancient Greece with Solon, the lawgiver. Solon was the leader of the city-state of Athens. He is known as the father of the Greek democracy. About 594, he issued the first constitution to settle long-standing conflict between nobles and the common people. The poor, along with their wives and children, were in slavery to the rich. All land was in the hands of a few. The existing set of laws had been issued by Draco. They were very harsh and favored the oligarchs of the time. To stabilize society, Solon decentralized political power and the money power. He knew that in order for society to be successful, the commoners had to have some power, some money, and hope of success in order to create an incentive-driven society. Solon abolished slavery and allowed anyone to serve in the legislature. He was the first to allow commoners to sit on a jury. To improve the money supply for the commoners, he ordered forgiveness of interest debt for mortgages once the principal was repaid, and doubled the money supply by calling in all precious coins and having them recoined with only half the precious metal as before. This reinvigorated the Athenian economy and brought on these results: the golden age of Athens. Naturally, the devaluation curtailed imports, but that only boosted internal production and exports, just like it does in every society today. That's why it would be good for Greece to leave the euro and reissue the drachma. Yes, they would suffer devaluation, but what does devaluation mean? It means that Greece would no longer be able to import BMWs from Germany. Is that such a bad thing? In other words, it would massively stimulate internal production. Yes, the oligarchs of ancient Athens lost out from the Solonic constitution and reorganization of government. But even they realized that this was a small price to pay for preventing the nation from falling into permanent chaos and lawlessness. Consequently, Solon remained popular with all classes of society. As Nobel Prize winner Frederick Soddy would write in 1934, it was recognized in Athens and Sparta centuries before the birth of Christ that one of the most vital prerogatives of the state was the sole right to issue money. But of equal importance was another factor. Solon's reforms created a remarkable sense of civic duty, your country calling. Solon's personal modesty served as a powerful example for the rich and powerful of Athens. Government was now being run in the public interest, not just to benefit a powerful plutocracy. In the public interest became fashionable. This fostered a sense of civic duty that I saw the clear reflection of in my parents' generation. That's what is meant today when you hear that rarely used term, self-sacrificial. The willingness to contribute to the public interest. As long as my father worked, my mother was always involved in volunteer work. She was head of the Red Cross in our county. I'm at the bottom left, the one holding his mouth saying, "Whatever you do, don't go into the speaking profession." Solon's example cut across the class structure. It was this sense of public duty that helped Athens defeat the Persian army at the Battle of Marathon in 490 BC, where 10,000 Athenians repelled an army of 500,000. All of these points, every single one of them, has modern-day applicability. In order to fix our economic problems, we must restore the concept of civic duty or buy-in. No machinations of central banks can possibly compare to this simple yet irresistible power. At the height of his power, Stalin rejected calls to use his tremendous prestige to make himself a tyrant. This later served as the model for George Washington's rejection of calls to become King of America after winning the American Revolution. Now let's look at the second overlooked macro-macro influence, the over-consolidation of power problem. This is particularly applicable to Turkey. One of the most interesting paradoxes is that there are two opposing currents battling it out in this river of human history. On the one hand, you have this unstoppable will for humankind to seek freedom from tyranny. But on the other hand, you have organized efforts to break down nationalism and replace it with globalism. It's always sold to nations as the only way to bring world peace. Peace? Well, maybe, but at what price? Certainly this transnational consolidation of power would follow Lord Acton's axiom. Power tends to corrupt, and absolute power tends to corrupt absolutely. I believe that any transnational organization, no matter how benign its original goals may seem to be, will turn despotic. This transnational despotism is no more sustainable than any form of human slavery. Once they have nothing more to lose, the slaves will revolt. One of the most effective ways to destroy buy-in by the population is for a nation to agree to give up some of its national sovereignty and join a regional governance scheme. So if you are really interested in creating a sustainable governance that will last centuries, my advice would be to follow the ways of Solon the lawgiver, who boosted national pride, and not those of the United Nations or the European Union, who openly attack national sovereignty. Why? People love their nations. It's an identity that makes them separate from their neighboring countries. It's just like in families. If you grew up in a family with 4 children like I did, everyone tries to find a separate identity. If the firstborn is a model child, for example, frequently the second will rebel against that identity to some extent, to become unique, a special human being. We all think we are special. We all know deep in our souls that we were sent here by the Creator to fulfill a special mission that only we were created to achieve. So this is human nature, the necessity to create a distinct, special identity in the world family. Now, when you go attacking that nation-state identity, people don't like it. They tend to rebel against it. That's why the first attempt at global governance, the League of Nations, failed. That's why the United Nations has failed to become an effective form of transnational governance. And that is why the next experiment has been the European Union. So if humanity will not buy into world government in one big bite, they decided to try to do it in small bites, and the EU was born. So what's the result? In Hungary in 2003, when the dangers of centralization of power across national borders was not yet recognized, Hungarians voted for EU membership with 83% of the vote. But Hungary never adopted the euro. They were proud of their sovereign national money, the forint. Last month, a new populist government paid off the last remaining installment of their IMF loan 1 year ahead of time. And it was not a trivial amount. I think it was $2.1 billion. They kicked the IMF out of the country, and now they are considering withdrawing from the EU altogether. Hungary's best friend in Europe is Poland. Poland joined the EU in 2004. It, too, never adopted the euro, despite 64% initially favoring it. By 2011, those favoring the euro had slipped to 32%, and last year that plummeted below 25%. The UK, which joined the EU in 1973, has never adopted the euro either. and may soon try to withdraw from the European Union as the anti-EU political party UKIP continues to make huge gains in Parliament. Now, 85% of British laws are no longer made in London. They're made in Brussels in the European Parliament, and the average British citizen is just becoming aware of this. It's becoming a major political issue. In just 10 days, Germans will go to the polls, and they may show a decided anti-EU shift in sentiment as well. So again, we have two opposite and very powerful currents of human opinion surging back and forth. It certainly seems to me that the oligarchs of Europe are favoring centralization of power, while the forces of Republican self-governance are waking up to the fact that these centralized power schemes will just leave their nation broke, powerless, and leave them stuck in a super-socialist national nightmare. This is my iconograph for a dictatorship. Very few people hold most of the power at the top, leaving the rest of us with very little say at the bottom. Attaining increasing freedom means moving from a very steep power pyramid to a very broad-based power pyramid, where power is spread out to the maximum extent which is politically practical, and we, the people, get to vote on the rules. Does government today look more like this, where power is spread out broadly among the people? Or does it look more like this, where very few people share the political power and the bottom layers feel very far removed from the decision leaders? So yes, power is getting more and more concentrated with every passing year. As a result, most people feel they don't have a say in their governance anymore. And once the people feel like they have no control over their governance, there is no buy-in. So we are at a fork in the road. National leaders have to decide which way they will take their people because there are only two choices. Will you take your nation down the path, the dark path of ever-increasing control and disregard for buy-in by your people by joining transnational governance schemes? Or will you choose the Solonic path of justice and liberty for all under the rule of law and governed by an incentive-driven republic? I'm going to run through these last two items, sovereign debt and the money creation power, rather quickly because I'm about out of time. Although I could talk about them for another half an hour at least. What are the two basic problems with government borrowing? Number one, first of all, there is interest. This is something you rarely hear discussed on television. Why? Because it's such a huge number. In the year 2013, the U.S. will pay about $450 billion, that's billion dollars of interest on a $17 trillion national debt. But a new study by the University of California researcher just released on Monday, this is brand new, startling information, says that the actual debt of the United States is now over $70 trillion. The new figures compiled by Professor James Hamilton adds for the first time the government's support for housing and other loan guarantees, deposit insurance, actions by the Federal Reserve, and government trust funds. Certainly in a rising interest rate environment, interest payments alone could crush the U.S. economy in coming years. The second issue is control. Who do nations borrow from primarily? Banks. And what if the biggest banks don't like the policies of the United States government 5 years from now? Well, they might just decide to stop creating enough play money to support all this government debt. So this is the first problem with government debt. Remember the proverb, the borrower is servant to the lender. If government is the borrower, it is no longer sovereign. The lender automatically becomes the sovereign. Political science has devised a word for this condition. It's called plutocracy. One thing is for certain, no truly effective legislation to diminish the power of the biggest banks can ever come out of a legislature that is borrowing from these same banks. So in order to have any shot at developing a Solonic structure where you effectively cut the control of government by banks, your government cannot be allowed to borrow not 1 lira, never again from anyone. So now we come to the fourth point, the money creation power. Even if your country is not borrowing, there is still a big problem if your banks practice fractional reserve lending. Why? Because this means banks create the vast majority of the nation's money, and guess what? In the US and the UK, that's about 97% of the money supply. Banks are corporations, and corporations are required to maximize their profits. What does this mean? It means that banks will never operate in the public interest. It is impossible for them to operate in the public interest. Therefore, you cannot give them the money power. You have to return banks to full reserve lending. And my definition of that is banks can only lend out $1 for every dollar of capital that they have on their books. This does not mean nationalizing banking. I agree with Irving Fisher, head of the Chicago School during the Great Depression of the 1930s. Nationalize money, but do not nationalize banking. We need commercial banks. They provide services we all use every day. They need to be the intermediaries between borrowers and lenders, such as with Islamic banking, not actually be the money creators. The way a correct banking system should operate is the government should create all the money in the first instance, get all the seigniorage from that creation. Seigniorage means the profit from creating money. Then lend out to banks at, let's say, 1% interest. Then banks would compete to give the public a better deal. And just to correct a misunderstanding from yesterday, no monetary reformer believes that the legislature should have control over this money creation power. So now, a brief review. The 2,500-year march refers to the roots of truly sustainable governance, governance of the people, by the people, and for the people, as represented by Solon, the lawgiver of Athens. Number 2, over-consolidation of power kills sustainable governance because it kills buy-in from the public. This is a tremendously underappreciated feature. National debt. National debt is killing national sustainability in 2 ways. Number 1, the interest is sucking the life out of their economies, and number 2, the control factor exerted by the lender ensures that the problem cannot be fixed by legislation.
Thank you, Bill. I think you were wrong when you were showing yourself as a future bad speaker. First of all, not only the content, but also timing was excellent, although you were late by 1 minute. That I think we could really ignore. Now we have a, let's say, 2-3 minutes time span for, discussion between yourself and myself, and then after Tarık, we will have, again, we will be opening up discussion to the panel here. Of course, your presentation deserves a much longer debate, maybe for a full day, perhaps. But we have only 3 minutes, so I will choose to select one question, which has A and B, 1A and 1B, and then let's get your quick remarks on that before we move forward. At the beginning of your speech, you were talking about the money creation in the U.S., which a lot of people are aware of. What the U.S. has done after 2000 and 2001 was to raise the money supply in order to stop the, a possible, let's say, collapse in its own economy. But then that caused the big crisis in 2007, 2008.
It caused an even bigger bubble.
However, the damage was more, by the way, in Europe than in the US. And nowadays, the recovery is not in Europe, but also in the US. But that recovery also, at least partly, came back by, let's say, re-inflating the bubble.
It's just a bigger bubble.
Through multiplying the Fed balance sheet.
Right.
And now the US is talking about how to take it back And even the talk of US about how to slow down the growth by reducing the bond purchases created a lot of problems in other parts of the world, including emerging countries and Turkey. The talk about the slowing down the growth of money, not talk about slowing down the Fed balance sheet to the normal. What do you think of the future of US economy? Can US sustain itself?
This is such a complicated question. There's so many variables. I'm ill-equipped to answer such a question. We've heard for a couple of years very large U.S. debt figures being floated around. And since they didn't really have academic support, I didn't pay much attention to them. They could have been true, but I wasn't about to go public and say, oh, look, this is the first time I've gone public with this major bump up in U.S. debt, and it has just, we saw from the presentations yesterday, everything was based on a U.S. debt of $17 trillion. But what if that U.S. debt is actually $70 trillion? It's going to have a huge impact, and I'm just not smart enough to be able to answer that question.
That is humble enough, but nowadays these two questions, the second one is always in the background of every discussion everywhere, how US can sustain itself, although it's not a public question. That is discussed in panels like this.
Thank you for reminding me.
And the first one is actually nowadays quite a fashionable topic among even the practitioner, the practical financial people. There is even, just because you have named an academic, I could also name an academic whose name is Helen Ray, a French woman teaching at LBS in London. The paper that she presented in Jackson Hole 2-3 weeks ago basically argued that there is no more an independent monetary policy for an emerging country given the dominance of the US printing press among the whole world. So there is a world, there is a Fed. Is the Fed really the central bank of US, or has it become a central bank of the world where smaller economies, even perhaps European Central Bank, can they follow an independent monetary policy? But anyway, so I cannot go further on this. Let's go to the next discussion after such an interesting speaker.
I'm going to answer some of those questions here.
Okay, so
but first, I've got a point to make. First of all, just as Professor Jeffrey Sachs from Columbia said on April 17th at the meeting at the Philadelphia Fed, these aren't my words, these are his words. The U.S. financial system is run by nothing less than a conspiracy of gangsters at the top. They are completely outside of the rule of law. They have completely bought out the regulatory system. The President of the United States has absolutely no control over them. They're gangsters. They're completely out of control. And they're destroying not only the U.S. economy, but the economy of every nation on this planet. I don't know how this is going to resolve itself. They say that the U.S. is the cleanest dirty shirt in the globe. I wouldn't use the word clean. We're maybe the crookedest dirty shirt on the globe, and so therefore we're going to be able to devise yet another way to reinflate this bubble. I don't know, but I just had to get that out, that I'm completely disgusted with the American financial system and and the effect it's having on countries that are really trying to do the right thing, like Turkey. I was so heartened by the President's message yesterday. Finally, in the last few years, we're getting parliamentarians in Iceland and other places who are coming around to alternative monetary systems to fix this problem. And now this wonderful conference here in Turkey, the best I've ever seen, and the President's message, I was just absolutely floored yesterday to actually have the head of state of a nation trying to create a national money system in the public interest just blows me away. Bravo, Turkey. Go for it.